Hi, Dave Geary, MMJ.
Hi guys, Daniel Hastings here and welcome to our August edition of the MMJ Real Estate Wrap. A couple of things to think about. Obviously we're at the end of winter now, so we're approaching that, now basically on the verge of that traditional spring period where there's usually a bit of a pick-me-up, probably a few more buyers around getting out there in the warmer weather. And a few people tend to hold off listings, rightly or wrongly. There's arguments both ways, but there's certainly some people that will be holding off listings. There might be a few other options out there. Speaking of the market and so forth, Dave, you've got a few observations out there at the moment and probably some things to knock on the head about some perceptions in the marketplace as well.
100%, mate. Now, what you've got to look at, guys, is the auction clear rates have become a bit of a misunderstood barometer of where actually the marketplace is.
Yep.
And the reasons why is because that's very easy to track and report on.
Yep.
All right.
Sure.
So now I'm not saying that they don't matter, because they do, they actually do. But what I'm saying to you is that they're a little bit inaccurate. And the reason why it actually doesn't track pre and post auction sales.
Yep.
It doesn't
Only
track
the ones under the hammer.
Correct. And also it doesn't do private treaty as well. So guys, even though that clearance rates are actually running about 50 to 59%, it's been varying. Basically, the true fact is that when you take into account all this information and what's been happening, it's around 70 to 75%. So about 3/4 of the property are being still selling in real estate. So that perception, they think it clearance rates at 50%.
Yep.
Means only half selling, but it's not really the case. Really, a lot of stuff is selling.
They usually sell, be it auctions. I mean, if they don't sell under the hammer, it's very typical, I know in our experience, and I'm sure other agencies as well, that they sell within a very short period after the event as well. So obviously it's a very strong testing, pretty intense, probably 3 to 4 week period. So yeah, usually owners are knowing where they've got to price it if they haven't sold at auction as well. So that usually makes the auction process, including the post-auction process, really viable, and it's often a very successful period as well. So again, not read or not analysed in those stats.
Yeah. So what we've noticed is that late 2017 was basically the change, wasn't it? Coming in around November, all our statistics are showing that that's where the peak was, and then it changed. And then basically in the beginning of the year, right through to the end of financial, it was adjusting, wasn't it?
Absolutely. Yeah, for sure.
But what we've noticed now, guys, it's actually levelled out. Things are a lot better than what the perception out is in the marketplace, which is a good thing. So what signs to look for in the marketplace is, and something that I've noticed out there, I'm sure Daniel has as well, that a lot of buyers are out there saying, yeah, there is stock in the market, and there's stuff hanging around as well, but there's a lack of good stock out there in the marketplace, and they're struggling. So some buyers are out there being looking, can't find that right place. And that's been very, very common, especially in certain areas. So that's showing one of the changes. Social and political things, guys, is a big thing. Prime Minister change. That's another thing that you're watching the marketplace.
Good on your politicians, well done. But anyway, yeah.
But what I'm doing is finding that a lot of owners are actually either kind of being a bit more fixed and sitting on their pricing and not taking the offers they're currently getting at where the marketplace is.
Definitely finding it hard to adjust after seeing the heavy days of the previous few years. So it's a natural reaction and a bit of an adjustment period for them as well.
As you said in the beginning, spring, you put your house on the marketplace, and there's a lot of people that are hesitating, thinking, I'm going to wait for better times. Still, it's much better now than it was earlier. And the other thing is people are actually hesitating and then going, I'm leasing my place as well, instead of putting it on the market. So they're those changes you've got to watch for as well. But I think it's very interesting times.
You made a good segue into the rental side of things there as well, so well done. And definitely some REI information out of the Real Estate Institute of New South Wales showing that the Illawarra is doing pretty well. I mean, I think it's fair to say that, and certainly in our experience here, we've got a very strong residential property management arm. Vacancy is definitely a little bit higher. It's around about 2%, and we'll show some stats on that from recent quarter analysis as well. But in saying that, I mean, you look at Sydney. Sydney currently is tracking at 2.8%. So I think as a region we can be pretty comfortable that it might be not as low a vacancy factor as we've seen in recent history, but to say, at the end of the day we're comparing rather very well. And I think that's just a good sign going forward for the foreseeable future. If the vacancy factor is a bit too high in parts, it's not going to encourage investment. So I think as a region we can feel very comfortable and positive about some aspects on the rental side of the market as well.
Excellent. I think that might be a wrap.
It is. Enjoy your start of spring, and we'll see you next month.
See ya. Bye.